I'm glad to welcome you all to the Upscale YouTube channel. This is Igor Fox speaking. Here we share the most interesting and useful information about trading and more. Today we have a special guest in the studio named Marcel, who is a professional trader. Hello, Marcel.
Hello, Igor.
Marcel, could you please tell us what brought you to our studio? How is your journey as a trader different from others? And why should we even listen to you?
Great questions. Well, let's start with the fact that my name is Marcel. I'm 32 years old and I'm a professional trader. How am I different from many others? That's a very good question. Well, to start with, I probably began trading with the largest possible amounts. So my start in trading was somewhere between 1 and 2 million. So instead of opening a demo account, like most normal people do, putting a small deposit of $100 or $200 on the exchange, trying myself out and figuring out whether I want to do this or not, I decided to dive in headfirst right away. That's it. And what do you think happened? In a month and a half to 2 months, those 2 million were gone. But despite all that, I had a burning desire to see it through to the end. I basically realized overall what my mistakes were, what I kept stumbling over, and what I needed to work on. But even so, I couldn't do it without mentors. I learned from all kinds of traders. So there were two teachers. One was a teacher who trained me, so to speak, in volume analysis. And the second was purely for psychology and managing, as they say, my own emotional and psycho-emotional state.
Marcel, how did it happen that you had as many as 2 mentors? So you said that you had a mentor specifically in technical analysis, in trading history.
Yes.
But at the same time, you also had a psycho-emotional mentor, which I actually hear about quite rarely.
Not a psycho-emotional partner, but rather a trader, a person who specializes in emotional intelligence and the psychology of trading. So without psychology, all the other elements of profitable trading don't really work.
You've already shared with us what your first steps were.
Yeah.
So you started with large amounts of capital, which honestly blows my mind, to be honest. Why did you decide not to trade on a demo account?
Well, first of all, there was an urgent need to put the capital to work. First and foremost, yes. In other words, the money needed to be working. That's it. And not trusting anyone else. In other words, without any trust management or anything like that, setting all that aside, I realized that in principle, I could try to manage the capital myself through futures trading, through spot trading. But for the most part, I put more emphasis on futures trading.
So which markets do you mainly trade on? For example, crypto, forex, or stocks?
So I had a significant crossroads, so I had a very clear choice to make. Either go down the established path of traditional trading on the financial stock market, or alternatively, go with the emerging world of cryptocurrency. I ultimately chose cryptocurrency. Why did I make that particular decision? Because first of all, I was genuinely interested in it myself. Even if you take trading out of the equation, The field of cryptocurrencies itself has always fascinated me. At the same time, there are highly volatile situations there, compared to the stock market, because the stock market is already saturated with capital and accordingly, it's not as volatile as crypto. That's why I chose the crypto market specifically. Yeah, and actively trading and effectively earning on the digital crypto financial marketplace.
Overall, if you look at the recent crypto cycles, they really last for a shorter period of time, and as a result, more trading opportunities arise and you get to enjoy various bull runs more often. That is, unlike the stock market, where a cycle lasts about, say, 8 to 10 years. Well, if we're talking about a really large-scale cycle, meanwhile, in crypto we see that cycles repeat every 3 to 4 years. And of course, the issue of emotional swings is much more pronounced here than in the stock market.
I agree.
Could you please tell me one thing? Do you consider yourself more of a fundamental trader or a technical one? Because later on, we'll get to your trading style. And so we need to understand right now what exactly we'll be listening to you about.
Look, first and foremost, my main focus isn't even on technical or fundamental analysis. So from technical analysis, I only use sloping trend lines and horizontal resistance and, of course, support levels. That's it. But even so, I give more preference to volume analysis because volume analysis is kind of the core of profitable trading, I would say. Yes, all sorts of different management and trading strategies stem from it, right? That is, this includes smart money and many, many others. So the core of volume analysis branches out into different directions according to various, let's say, criteria of analysis. In other words, it depends on what people pay the most attention to. That's it. And for the most part, I am a trader who uses and relies on volume analysis.
So basically, your trading strategy is built around whether a whale has entered or exited the market at a given moment.
More or less, if we speak abstractly. Abstractly, yes. That's more or less exactly how it looks and works.
And how do you determine that the whale that came in 1 day ago,
Yes.
he will come out, for example, in 2 days? And how do you determine that the whale that came in 10 years ago won't come out right now?
If we look at the local slice and short-term trading, then I just need to look at the chart, look at the clusters, at the indicators where there are volumes, where there have been volumes. That is, if it's at the support level, there should naturally be some stopping volumes from the buyer's side. When buying power shows up accordingly, volumes come in. I can see that. And what does that mean? What does that indicate? Yes, first and foremost, it means that the bulls are prevailing. Accordingly, there will be a break in the movement. That's it. But if we see that, for example, the price of Bitcoin is holding within a certain range, and at the same time, the price isn't being allowed to go up, and the seller dominates there, in other words, the bear. Accordingly, this means that you either need to wait it out or join the downward trend. That's it. And in this way, by looking at volumes, at horizontal trend levels, as they say, and on top of that, there's a bundle of combined factors. This is market psychology. In other words, what's the market context? And of course, the news background that is not in the short term, but specifically in the medium term. And the combination of all these elements, as they say, is what brings that very profit.
Marcel, before we move on to how you work with the terminal, could you please tell us how much time you spend on trading each day? For example, how was it a year ago and how is it now?
Before, at the initial stages, it was from 6 to 14 hours a day. So that means...
When did you sleep then?
Well, I would literally go to bed at 2 in the morning and get up at 8 or 9. Sometimes I even got up earlier because I had this really burning desire to achieve and create a good result. In the beginning, I devoted a lot of time to the market, to the charts. But that doesn't mean I was just sitting there for 12 to 14 hours only trading. I mean, opening and closing positions, opening and closing, right? No. I mean, I was studying, looking at coins, for example, the behavior of a particular coin, or considering other probabilities, right? That is for other coins as well. And accordingly, from all of this comprehensive analysis, I ultimately end up with a carefully curated list, say, of approximately 5 to 10 valuable assets that I consistently keep my primary focus on, and then diligently start actively trading, depending entirely on the prevailing market situation and various other relevant factors. So if there are good entry points, if there's a solid setup, then by all means, go ahead.
Based on your experience, given that you've devoted so much time to trading, what is the most important piece of advice you can give to our audience, especially those who are just starting their journey in trading? What is the main quality a trader should possess? And what is something a trader should never do in their life?
Well, first and foremost, it has to be discipline. That is strict, clear, and well-defined discipline. So if a trader sits down at the computer at the terminal and has determined for themselves that there is a certain trading plan, certain entry points, and as they say, a goal for building profit and capital within the day, right? And accordingly, they stick to these criteria. Stick to your trading plan and everything else. So in fact, the most important skill of a profitable trader is discipline. And from there, all the other aspects follow.
And what about risk management?
Risk management is risk management and adhering to risk and money management is exactly what falls under that very discipline. So what do I mean by trader discipline? It means following risk and money management, sticking to your trading plan and following your trading strategy. That's it. And at the same time, you shouldn't overheat. Well, not overheat, but rather you shouldn't let yourself get overheated. That's the right way to put it. What do I mean by that? I mean, there's this thing that happens when you're actively trading, opening and closing positions, and after a while, your brain kind of starts to, boil over, figuratively speaking, right? And then you don't assess the market situation as clearly, and as a result, your brain gets tired. So based on all of this, from my experience, I recommend spending a maximum of 4 hours a day on active trading. Active trading means working with the terminal, setting stop losses, take profits, and so on.
And when your head truly starts to boil from the intense pressure of trading, does talking to your fellow traders genuinely help you?
Yes, of course it helps. It's a way to switch gears, for example, by joining trading chats or engaging with the community. For example, creating some kind of content. So for the most part, I distract myself with creative activities. That is with creativity or with sports. I might go to the pull-up bar or do a bit of exercise at home. And accordingly, this helps me switch gears internally. So my mind shifts away from analyzing numbers and all those difficult calculations to more peaceful, as they say, activities. That's it. So creativity and, of course, communication and socializing.
That sounds absolutely great, balanced, and most importantly, beneficial. In the meantime, I want to remind our audience that Upscale has its own community, which is available on Telegram. You can scan the QR code that will appear on the screen now, and there you'll be able to meet both funded traders and those who are just starting their journey in trading. There, you can exchange your insights, trading ideas, and ask how different people handled various situations. You'll also be able to meet Marcel there, who will share his experience with you. Because as Marcel said earlier, Marcel loves to share. Marcel, do you like sharing your experience?
Of course.
Marcel loves to share his experience, so we're looking forward to seeing all of you in our very welcoming community.
Warm, I would even say.
Even warm. As we know, you've been trading for 5 years, and since such a significant amount of time has passed and you're still involved in this field, it means your results are positive. Is that correct?
Yes, absolutely right. In fact, for the last 2.5 years, the results have been more than positive. So all this time was spent gaining practice and experience. So I've actually been familiar with crypto for 7 years, but I've been actively involved with it for the last 5 years. More actively trading, well, I've been trading for about 3 years, yes. And with all that, I reached more stable results about 2 years ago, you could say maybe 2.5.
So before that, like everyone else in any field, you went through a series of trial and error. You worked on your mistakes, just like many of us did in school, sitting at our desks. After that, you refined an ideal setup, an ideal trading strategy that you now use for trading. And our audience would be really happy if you could share your insights. We could take a look at how you analyze charts on the terminal, how you look for entry points and everything that goes along with it.
Yes, of course. But you know, like the fine print in banks. So, I mean, I'll show my trading strategy, what I pay attention to, how I select entry points, and so on and so forth. But that doesn't mean that someone else will be just as successful with it.
Because everyone has their approach.
Yes, absolutely right. But I'll be happy to share my approach.
Great. Then let's move on to working with the terminal. Let's go.
First, let's go to the terminal where I look at volume analysis and the overall market picture. So here I have the indicators set up in advance.
Sorry to interrupt you. Which indicators do you mainly use? You said you have indicators enabled. Which ones exactly?
Yes. Look, so I have cluster search. Cluster search is focused on detecting abnormal volumes. It can be configured manually, or it can automatically adjust itself to a particular volume. Yes, here I have 2 cluster search indicators set up, depth of market and market profile. Market profile is for volume analysis, yes. So in terms of volume analysis, that's either the balance profile or the volume profile, right? That means several indicators are used here at once. What do I need for this? First of all, I look at the clusters, then I look at their positioning, and then I look at the key points and key levels. Next, if I see that the volumes are positioned, let's say on the buy side, I look for the best entry point to join the setup, for example, to go long. At the same time, we understood that if we hold the 12,900 level and then move on to 113,800 or 114,000 per Bitcoin, we can calmly open a long position. And what did we see? Of course, a complete execution of the setup as of now. It just so happened that while recording the broadcast, we completely worked out the long setup for Bitcoin that I gave a little earlier in the terminal. In the Upscale chat.
You know, what else is interesting to me here?
Yes.
How would you describe your strategy in 5 words?
Volume, confirmation, setup, position control, that's all. Yes, 5 words. Position control, that's absolutely right. At the same time, I see that, and as everyone knows, there's also trading view, right? I have clusters set up here as well. So here I also have volume analysis. I also see the bid ask here. So it's not just a regular volume indicator here, but specifically one with abnormal marks, abnormal zones. That is, here I look at and assess the strength of the impulse in one direction or another. Yes. For example, here the bears were clearly dominant, which we can see, large volumes for selling. Accordingly, the volumes were positioned for a short. And here you could have taken a great, excellent short from the resistance level down to the support level, which is at 111,950.
Now, you just talked about longs and shorts. I'm sure most of our audience knows what that means. If you don't, honestly, I don't know what you're doing on our channel. But anyway, a long is when you bet on the price going up, while a short is a short position betting on the market going down. What did I want to ask you? I wanted to ask you the following thing.
Yes.
Since we are talking about transactions have different parameters. I'm initially interested in hearing what percentage of your deposit you usually use in a transaction. How do you calculate stop loss and take profit? So what is your risk reward?
On average, the risk reward is 1 to 3 or 1 to 2. It all depends on how volatile the market is. If the movements are stronger, accordingly, we take a setup with a higher probability of a bigger move. That is 1 to 3. If the movements are minor and there is no volatility, then it's 1-2. With scalping, the risk reward is 1-1. But at the same time, with a scalping strategy, the focus is on the win rate of your trades. So with a risk reward of 1-1 and the win rate of 70%, you're basically well in the profit.
That's right. Yes, that's right.
At the same time, when it comes to intraday trading, I always have a stop loss at 2% of the actual move and a take profit at 6% of the actual move. So if and the percentage of the deposit, I use between 5 and 10%. So it depends.
Is that taking leverage into account, or is the initial margin 5 to 10% of your deposit?
5 to 10% margin, that's without leverage. So in total, I have in a trade, but that's rare. In most cases, in particular cases, it's 2.5% of the deposit. However, when my stop is triggered, I lose -1%.
Yes.
From the deposit, well, there somewhere, well, not just 1, 1 and 2, 1 and 1, somewhere plus or minus. If we're talking about take profit, yes, that is when the setup works out completely, then 3% is added to the deposit. So in the end, even if with such a risk reward ratio, I have more losing trades than winning ones, my account will still be in the positive, right? So here, the win rate varies somewhere between 30 to 40%.
In your opinion, how important are stop losses and take profits when trading?
Well, to start with, I stumbled a lot because I didn't set stop losses for a long time. That is, at the very beginning, that's exactly why I lost a lot of money, because I didn't set stop losses. I held onto positions for too long, and as a result, suffered fiascos with my deposits. That's why I strongly recommend setting stop losses and take profits. That's it. But at the same time, you can actually work without take profits, but you must always use stop losses. If you're watching and trading the market in the moment right here and now, yes. For example, if you're not completely sure that the price will continue moving in a certain direction along the trend, right? Then you think to yourself, maybe it's better if I just lock in my positions, better a bird in the hand than two in the bush. And at the same time, I understand that, okay, everything's fine. I've taken part of my profit, I haven't missed out, and now I'm waiting for the next entry points for, as they say, stronger moves.
And you just shared the setup you discovered specifically for Bitcoin. The moves from 112 to 900, that's right. You know your setups better than I do. And tell me, please, in the trading community, there's such a thing as a trader's journal. Could you tell me what exactly you write down in it, and do you even keep one? Do you make any notes there about your, I don't know, observations, discovered setups, any strategies, your developments and things like that?
I understand, I get the gist of your question. Yes, of course, a trader's journal is also a very important thing for a profitable asset.
Do you have one?
Yes, I have one. Before, it was kept automatically back when I was trading solo, yes. That is, the trader's journal worked through API keys. I would just jot down notes, summarize things, and as a result, later on, I had a clear picture and understanding, like, okay, here I made a mistake, or here I didn't hold long enough, or I held on too long. So a trader's journal definitely has its place, yes. It's very closely connected. But at the same time, I don't focus on, as they say, making it super static or overly detailed, like some traders do. I'm not sure. They might have 12 or even 20 columns just to analyze a single position. No, here, the simpler the better, right? So accordingly, I just write down the entry points, what I was relying on. That is the values of those same indicators and so on. And then I would make a note about my psycho-emotional state, of course, what I was feeling during all of this. But that was earlier, at the initial stage. Now I don't really experience any strong emotions as long as everything is under control. Well, as they say, that comes with time. So yes, I do keep a trading journal and I write down the notes that help me the most. So again, coming back to the point that the same trading strategy might work for me, for example, according to one principle with certain parameters, but for someone else, it could be completely different. That is, the process of working it out takes place. Working it out specifically through the trading journal, not just working out the setup, but actually doing the work. Why do I call it working it out? Because it's real full-fledged work. You study the market, you create a trading plan, and then, of course, you make notes. Did you follow your trading plan or not? Did you manage your positions to the end as you were supposed to or not? So yes, it definitely has its place.
You just mentioned the trading plan. Is that a separate entity from the trading journal?
Yes, that's right.
And you don't combine them? For example, you just told us about your setup from $112,900. Did you record that thought somewhere so that after opening and closing the trade, you could compare the information from one place to another?
Yes.
How does that process work?
Look, when I'm analyzing what can be taken from the market, I put together a setup accordingly. So In the text version, I always have those points that are worth paying attention to. That is entry points, triggers, and so on and so forth. And along with all that, a trading plan. A trading plan should be made for the week, for the month, and for each day. So in order to follow step by step, you have a clear definition, a clear picture, and you stick to it strictly. If you start going off in other directions, then things start to work a bit differently. That's it. And in this case, there are actually a lot of specific situations where a person deviates from their trading plan because there are emotions. There is the influence of the market on price movement in one direction or another. Since you expected one thing, but something else happened, and your mind starts to work a bit differently as a result. The main thing here is to pause, look at your trading plan, and whether something went wrong or right, still make notes in your trading journal. In other words, the trading plan and the trading journal work as a single mechanism, but at the same time, they are kept separately because the trading journal is about the end, the conclusion, the closing of a trade, while the trading plan is precisely about the beginning of a trade and the start of the trading day.
I'm sure that most of our audience will find what you've shared useful, specifically that there are several different elements that support your trading, in particular the trading plan and the trading journal. But there's another aspect of this whole story that interests me. We're all rather extravagant people, you could say. We wouldn't be human if we didn't come up with different ideas. I'm sure that at some point you've had experimental trading modes when you wanted to test whether a particular new trading strategy you'd developed for yourself actually works. Lately, I would say over the past year or two, artificial intelligence has become extremely popular. Tell me, have you used artificial intelligence in your trading? How did you adapt it? And overall, do you think that artificial intelligence, a neural network, could replace your work? Or do you still think you are needed?
At the moment, yes, I use neural networks. At the moment, GPT or any other artificial intelligence model cannot fully replace a professional trader. Why? Because first and foremost, a trader observes many different factors. Yes, I use GPT in my work, but only as an assistant. Yes, that is, I give it additional instructions myself. In other words, AI doesn't have the ability to just look at the chart or to simply open a trade, for example, or and so on and so forth.
It can look at a chart in the moment if you send it a screenshot.
Yes, yes. So without any additional actions on my part, it's basically, well, useless. Why? Because, well, first of all, I've already captured the chart and sent it to it, but at the same time, I've already uploaded my own knowledge, my own expertise, so to speak, into it. And in this way, I'm interacting with it. So it immediately helps me navigate the chart more quickly, instantly marking out levels, stop losses, and take profits. So in this regard, I sometimes use it when I'm doing fast intraday trading or scalping.
You just shared with us that you use artificial intelligence in trading. Could you demonstrate this for us in a separate YouTube video?
Yes, of course, I plan to do that. I'll show the entire process of how I interact with GPT. There might even be a dedicated challenge for this experiment. And after that, I will definitely share it with the audience of our wonderful community.
Marcel, we've already had a chance to get to know your experience, see how you trade, what key points you rely on when forming your trading strategy, and how you keep your trading plan and trader's journal. And within all of this, there's actually another important aspect that we've only touched on briefly. That is, in fact, the psychology of trading. So let's move on to this part of our interview. And the first question I have is, how important do you personally think psychology is in trading? Is it possible to be like a robot, or is that unrealistic?
Psychology plays a very important role in profitable trading, specifically in profitable trading. Why is that? Because when we talk about psychology, what do we naturally mean? Discipline. And discipline brings with it risk management and money management. So psychology in trading is just one of the components, in fact,
one of the pillars on which everything as a whole stands. Basically, yes, the three whales. So we've established that psychology is important. We've established that risk management is important. We've established that psychology is important.
Yes.
And we've realized that market exposure is important simply based on your experience that you shared with us. Because how can you even start trading long-term with good results without having that exposure? Is that all correct? So we have three factors that determine a trader's success.
Absolutely right. And all of this boils down to three factors.
But at the same time, the most fundamental one is psychology.
Yes.
Because as far as I know, I've talked to a lot of traders and every single one of them shared this. That 80% of overall trading success truly depends, in large part, on precisely how you effectively handle your inevitable losses, how you skillfully manage your significant profits, and whether you can consistently keep your composure and maintain a clear head during the actual trading process. Did you experience this yourself? What emotions most often got in your way while trading, and how did you overcome them?
Well, at the very beginning, it was really hard to deal with fear because the sums were large and naturally there was a fear of loss. But then that fear of loss was worked through, processed, and everything started to go, as they say, like clockwork, right? So how did I cope? Well, first and foremost, again, it was sports and taking contrast showers. Next, of course, I even have a separate GPT bot that but serves as a trading psychologist. So I have...
Really?
Yes. So I have a trained GPT bot, a GPTs, that specifically serves as a psychologist, because as everyone knows, both in large prop firms and on the stock market, there are many psychologists who specialize in working with traders, right? That is, there are even staff psychologists in large major funds who provide psychological support to traders in various situations. I managed with the help of psychologists actually, but that was about 3 years ago maybe. I had a personal psychologist, but after a while he said, listen, I need to see a psychologist myself after our sessions. Yeah. And so because of that, our work together ended, and he gave me a certain framework to follow, like how to measure my emotions and control them accordingly. Yeah. And combined with practice, those emotions that used to dominate gradually fade away. Like before, it was like, wow, you open a $10,000 trade, well, with margin, of course, with potential, right? Then you just sit there, damn, your heart's pounding, you're shaking, the price is all over the place. But then a year, 2, 3 go by, and a $10,000 position just becomes routine for you. So again, that's what it comes down to. In other words, psychology is a really important thing. But at the same time, practice and experience also matter.
You just shared your experience trading with funds that were given to you to manage, but for which you bore full responsibility. Is that right?
Yes, there were millions involved and not all of them were mine.
I understand, but here's what I'm curious about. We're on the Upscale YouTube channel. Upscale is a prop trading platform that gives traders access to our capital. So, it turns out that traders on our platform don't bear responsibility for the capital. We take on all the risks ourselves. And tell me, I know for sure that you trade on Upscale. Is trading on prop trading platforms different from trading with your own money? Does it feel psychologically easier?
It's fundamentally different from solo trading, but at the same time, Upscale and the prop firms within Upscale, for example, have strict rules. So there's a daily drawdown, a daily limit, a maximum leverage of 5, for example, to help regulate things as well. Although leverage, in principle, doesn't really determine risk management that much, right? But as a lever, that's what people are used to paying attention to, right? So there are some other aspects here. And yes, working with a company, with a prop firm, with the capital of a prop firm is much easier emotionally than solo trading or managing other investors' capital, so to speak. I feel more comfortable when trading on a prop account because I understand that the maximum risk is just losing time. Yes, that's the most valuable resource at the moment. But when you trade and say, blow up your first account at a prop firm, you realize, okay, naturally you make some notes. And after that, it's not hard to stick to the rules set by the prop firm. Yes, it's much easier emotionally to work at a prop firm than to trade solo.
We've thoroughly discussed how everything seems so incredibly bright, truly fun, and generally quite favorable for aspiring traders at various prop firms. But let's say we have a trader watching us right now who is trading on a spot account for the first time. And I'm sure you've also traded on a spot account, not just futures, or even if it was futures. Overall, the emotions are basically the same. And tell me, please, I'm sure you've had a losing streak. When you open a trade and it just goes nowhere, then you open another one and it also goes off somewhere, but not where you wanted. So how do you react to a series of losses? Or how did you used to react to them? And how do you react to a losing streak now?
Oh, it's like night and day. Before I used to react very emotionally to a losing streak. And the thing is, a losing streak usually leads to an even bigger losing streak if you don't stop. So if you have a streak of stop losses, say 3 or 4 in a row, and you realize that overall you're heading in the wrong direction, you need to pause for a bit, reflect, take a breath, and look at the whole situation from the outside. But when you're controlled by your emotions, they tell you, come on, let's get in now. We'll definitely make up for those stop losses. So you enter again, another stop loss, try again, another stop loss. At that point, it's either total disappointment and a complete loss of your deposit, or you take a pause. I've gotten used to taking a pause. So if I get 3 stop losses, I take a complete break. I distance myself from the market, as they say, and start doing something else for a while.
You remove it from your life and go away.
Completely.
On to live in the forest as a lumberjack.
Yes, and I'll live in a dugout. Basically, it's peaceful there. No market, no noses around.
There are moles that come to visit you and all sorts of little needles.
Yeah, well, yeah. Seriously though, as soon as I hit 3 consecutive stop losses, I immediately stop all trading activities, take a much needed breather, and then I either come back to the market in a few hours, perhaps later in the day, or I simply wait until the next trading day to resume.
We have just discussed a series of significant losses, but at the same time, a trader can often feel quite frustrated emotionally because they ultimately didn't fully realize all the potential profit they could have genuinely gotten from their initial setup. For example, you open a trade on Bitcoin and it's already showing you a green P&L of $200. You close the position and then Bitcoin keeps going up. You do the math either on your calculator or maybe just on a piece of paper and realize that your total profit, if you hadn't closed the trade, could have peaked at $400 or even $600, maybe even $1,000. So which is harder for you? Accepting a loss that's already realized, I mean an actual negative result, or accepting the fact that you missed out on potential profit?
Oh, look, over time, I've developed this kind of mindset, that when you open a position and set your take profit and stop loss, you fully understand for yourself that if the stop gets hit, that's fine. I accept that. If the take profit gets hit, I'm even more than okay with that, so to speak. But there are moments, when that sly little voice in your head says, come on, close it now. Everything's about to reverse. It's all going to go the other way. At least you'll save some kind of minimal profit, as they say. You start interfering. So for me, this is what's called FOMO, right? The fear of missing out, missed profit. In the past, I used to really give in to these emotions, but now I hardly give in to them at all. And I don't feel that urge to lock in a position here or there. If I see that the trend is going well, I just leave everything as it is. In rare cases, I close a position before the stop is triggered. But again, there are tricky situations when you see that the price is about to hit your stop and everything will close. So you close it in advance. And the price, right from the moment you closed early, starts to reverse and goes all the way to your take profit, yes. So there are a lot of different situations here, and I think the psychology aspect really deserves special attention, and it actually needs a whole separate series of videos. I completely agree with you. You really could talk about this endlessly, and you could record a huge amount of material about psychology and trading. But let's limit ourselves to some basic advice for beginners. What initial tips could you give regarding trading psychology? For example, what are the main 2 or 3 rules you would like to share that should always be followed? Well, first of all, to help yourself a bit psychologically, you need to create a trading plan for yourself, right? So the first thing is a trading plan, and you must strictly follow it. In other words, don't deviate from your trading plan. When you don't deviate from your trading plan, you have a clear understanding that yes, you have stop losses, you have take profits, you have set goals, and as they say, in case of unsuccessful trading, you have a predetermined drawdown level. Once you agree with yourself on these 2 components, as they say, things become easier for you. That's the first piece of advice. The second piece of advice is in the morning when you wake up, just ask yourself a question. Well, in terms of trading, yes. For example, you wake up and think, man, what am I expecting from the market today? What do I want to get? Or, well, what could go wrong? So basically, you take into account all possible outcomes, meaning both the primary and the alternative scenario, right? The second piece of advice, yes, is to monitor yourself and your emotions throughout all of this. In other words, keep an eye on yourself. As soon as you catch yourself feeling, as they say, either greedy or experiencing FOMO, or on the contrary, feeling completely down because your trade was unsuccessful, then if you notice yourself getting emotional, it's better to take a break. Take a pause, exhale, and as they say, look around. Go touch some grass. Yeah, go touch some grass, or I don't know, walk your dog, do some pull-ups, or maybe help an old lady cross the street. Anything can work. Well, everyone has their own way of switching off, as they say. Yeah, I recommend switching off, basically. Out of all this, I want to point out that of the tips Marcel shared with us, I use the second one, touching grass, because it's so green, it's so pleasant.
And how could you possibly truly refuse such an incredible pleasure, especially when you are feeling particularly insecure or quite anxious? Marcel, thank you so very much for graciously coming to us, for generously sharing your invaluable expertise and extensive experience, and for clearly telling us precisely how to effectively build a robust trading strategy and exactly how you skillfully manage your complex emotions in your trading endeavors. I'm sure this information will be useful for many, and people will take it into account and be able to trade just as successfully, calmly, and methodically as you do. Thank you for coming to us.
Thank you for inviting me. Thank you, as they say, for the questions, for your attention, and for the fact that we covered so many good topics here. I'm always happy to be helpful.
On this positive note, I recommend you subscribe to our YouTube channel and be sure to like this video so we can see how useful and interesting this kind of content is for you. Also, don't forget to follow us on our social media, where we share the latest news about updates to our protocol. I want to remind you that by scanning the QR code, you can try prop trading yourself and experience what it's like to trade with someone else's capital without the emotional roller coaster for your own psyche. Thank you for being with us. See you at the top.